Ben ritrovati lunedì mattina su Florida New York Stock Exchange. A questo momento indici vicinissimi alla parità, ma davvero su livelli record ancora per lo Standard & Poor's 500. Ne parliamo con il mio ospite qui su Floor, come vedete è Kenneth Polcari, che è direttore delle operazioni su Floor per O'Neil Securities. Kenny, ben ritrovato.
How are you?
I'm very well, how are you?
I'm good, thank you.
So Kenny, we are flat this morning, but the S&P 500 is still, on highs, and we're never seen these numbers. Right. What is going on in the market? Can we say that we are in a limbo right now?
Well, it certainly feels a little bit like we're in limbo because we've had not only this big move in the equity space, but we've come now through third quarter earnings season relatively unscathed, right? Performing just as most would have expected. This is the last full week of earnings. We got a lot of earnings this week, drug names. Certainly Apple today is going to be a big name that investors are going to focus on. But beyond that, we've got a slew of macroeconomic data, which I think the market is now really starting to pay a little bit more attention to, because they're trying to look for stability. They're trying to look for, is the economy in fact stabilizing, or are we in fact deteriorating the way some of the data points seem to suggest? And that's going to be a concern for the market. So people then say, why isn't the market under pressure? Well, because that only solidifies the argument for the Fed, right? And so now that we know the Fed's probably sticking around till March of next year, so that's another 5 or 6 months out. And so where are investors going to go? Rates are so low, they're forcing the risk trade, and so therefore you see the market moving higher. It feels to me though like it's a little bit tired at the moment. We've had a dramatic move. The market is up 24% year to date, and it's ahead of where the fundamentals say we are. So I wouldn't be surprised at all to see kind of this churning in a range bound trading pattern.
Especially because there are no reason whatsoever now to go higher, and maybe no reasons to go lower. Right. So we might, as you were saying, stick in within a range for a long time.
Within a range, and I think 1760. Since there's really nothing, there's no real resistance above us because we're at all-time highs. There's just a trend line that you have to kind of use as a guide, right? And so that trend line shows right about here, 1757, 1760, as kind of the place where it should hit some resistance, right? But yet on the downside, knowing that the Fed's not going anywhere, you're protected on the downside. Probably 1730, 1760 is going to be a tight enough range that you're going to see the market just kind of bounce around as it catches up with itself.
Now let's talk about the economy. We were saying that we are seeing a lot of mixed signals, kind of like good signals from the manufacturing this morning, not so well for the housing sector. And of course, we are going to keep a close eyes to consumer confidence. We're going to see the retail sales because December is approaching, the Christmas season is approaching. Consumers lately haven't been that optimistic after the debacle in Washington, and Obamacare might have another impact on.
I think Obamacare is going to have a big impact. I mean, listen, first of all, the Obamacare website it's been a horrendous launch, so that number one is concerning people. Number two, people that are now, there are employers that are now sending out notices saying that they're getting out of providing health benefits as one of the benefits, and that therefore they're offering people kind of a stipend, go out and get your own health insurance. And so too expensive, because now what people are finding is that in fact the programs out there, if they can even get on the website, are not nearly as competitive as the ones that they were in. And so therefore there's this growing sense of unease, which is certainly taking away from consumer confidence. Away from that, you have Hanukkah this year actually is much earlier. It starts around Thanksgiving, and then you have Christmas at the end of the month, and you've got retailers now, which in my sign is almost a sign of desperation, is that they're all starting to open earlier, right? They never opened until it was Saturday after Thanksgiving, then it became Black Friday. Now they're actually opening on Thursday, and then if they sense that it's going to be even worse, they may start even opening later on, Wednesday, keep it open all night long. And to me, it just sends a signal that they are themselves concerned over what the retail sales figures could look like in December.
As we know, consumers, consumption is a huge part of this economy. It's 70% of the economy. So all say that if December, if they manage to, show better numbers, but if the numbers are still very weak, what can that tell us about what the Federal Reserve might do? I mean, we're already excluding any any change until next year, but it may even go further.
Right. Well, right now I think the consensus seems to be March seems to be the appropriate time for the Fed to make another move. Because look, we're already in November, basically, right? Then December comes. Half the world is on vacation for the month of December, so no one really pays attention to what goes on in December anyway. Then January you have the new year, but then you have the change of leadership at the Fed. So certainly announcing a tapering during that change is probably not going to make a lot of sense. And then you've got to give the new chairman some time to get her feet wet as chairman, watching the numbers and setting her own path, right? So March seems to be the right time frame for the earliest possible, but that doesn't mean it could even happen in March. There are some people that think it happens in June, which is another 8 months out of stimulus. Now, I think what's getting frustrating for a lot of people, not only Americans but really for people around the world, is that at what point does it stop? At what point can the Fed begin to pull back?
And it's going to be very difficult to stop the longer we go, and more difficult it would become.
Well, and that's clear because on the one hand, they try to tell you, with every government report, they try to look at the positive, and I understand that. They try to tell you it's getting better, it's getting better. Okay, well then you should be able to start to pull back. But yet they can't and they don't, because when the Fed gets up to talk, they talk about they're still concerned. And so therefore there's a conflict, right? There's a conflict between the reports, and so the Fed errs on the side of caution, which allows them then to continue to stimulate. And so the problem is that the market and investors become dependent upon the stimulus, and that's going to be the problem.
What that means for this market, it seems now it's a Q infinity, so we might stay like this in this range until the end of the year at this point, Kenny.
Well, I think, I don't think there's really much of a reason to move that much higher. I really don't. I mean, although I've been saying that for a while, and we continue to march higher, but it feels right now that the market feels a bit tired. And that it does, the disconnect between the fundamentals and the economy is much greater. And so therefore, that tight kind of trading pattern to allow the economy to catch up probably makes some sense. If the market pulls back a little bit, what's it really going to pull back? Because again, the Fed is there. So even if it pulls back 5 or 8%, the market is still up, high double digits, still up 17 or 18% year to date, which by no stretch is a bad year at all. Right?
1,800 by the end of the year, is it feasible?
Well, listen, it's only 40 points away, right? So 1,800 could certainly be feasible, but I just, even though it's so close, I just don't see that there's any reason to go there yet, because don't forget, as we come into December, you have the whole Washington drama coming up, right? They've got to come to some kind of a budget in December. Now, they've already indicated that the grand bargain is not happening, so they're going to try to have a bunch of little bargains. Okay, well, all that does is really just kick the can down the road. And I think investors are once again getting frustrated with that. So is it possible? Of course. Do I see it? I don't. But I've been wrong.
And look at that. We might actually be wrong for other weeks and weeks. So this week, we're staying around 1760, with Apple earnings coming, FOMC, and all the economic data.
Right. I think we're in the 1730, 1760 range. Yep. Right. So we're right here at the top of at the range. I think 1730 on the downside.
Perfect. Thank you very much, Kenny, for being with us.
Thank you.
E grazie a voi per l'attenzione e a domani.